Gold and silver are heading into one of the most important periods in years. Not because of one single event, but because several global pressures are converging all at once. Tonight, I want to step back and look at what may shape the precious metals market through 2025 and into 2026, and how wider economic and geopolitical shifts fit into that story. First, inflation. Although headline inflation has eased in many economies, underlying pressures haven't disappeared. Governments, consumers, and companies are still dealing with elevated prices, and central banks are trying to balance inflation control with fragile growth. Rate cuts are happening and being talked about further, but cuts rarely come in calm environments. When central banks cut, it is usually because something in the economy is weakening, and that tends to support gold and silver as defensive assets. So while inflation may be cooling on paper, the structural forces behind higher prices are still there. Sticky wage growth, energy supply constraints, and the cost of refinancing government debt. All of these form part of the backdrop for 25 and 26. The next issue is debt. And here the numbers are becoming difficult to ignore. Many major economies have debt to GDP ratios that would have been unthinkable a decade ago. The cost of servicing that debt is rising as older, low-interest bonds mature and governments refinance at higher rates. The question isn't, will debt matter, but how will policymakers deal with it? Historically, debt problems tend to be resolved through a mix of inflation, currency devaluation, financial repression, higher taxes, spending cuts, or restructuring. None of these approaches are painless, and all of them have implications for gold and silver. Thirdly, geopolitics. We're now in a world where alliances, supply chains, and trade relationships are being reassessed. The US, Europe, China, Russia, India, the Middle East, all are moving their economic and strategic positions. This is not about predicting a specific conflict. It's about understanding that uncertainty, fragmentation, and mistrust between global powers tend to increase the appeal of assets outside the financial system. And gold, in particular, has historically played that role. The action of central banks are telling. Over the past 2 years, even, we've seen record levels of central bank gold purchases. Retail demand matters, but institutional and sovereign demand is what really shifts long-term trends. From a pure supply and demand perspective, the picture for both gold and silver remains tight. Gold mining output is relatively flat and expensive to expand. Silver faces structural pressures from industrial demand, especially solar, electronics, and battery applications. At the same time, investment demand tends to rise when economic or financial uncertainty increases. When those two forces collide, constrained supply and rising demand, you tend to see firmer long-term price support. None of this means prices moving a straight line. Gold and silver can be volatile. They respond to currencies, interest rate expectations, risk sentiment, and global liquidity. But stepping back, the bigger picture is clear. The forces shaping the next 18 months are very different from those of the last decade. You have slowing growth, high debt, shifting power structures, changing central bank behavior, and increasingly fragile global relationships. Together, they create an environment where precious metals tend to play a more important role. There is another factor that I think is worth highlighting, and that is the behavior of governments themselves. When economies become stretched, when public finances tighten, and when political pressures rise, governments often make decisions that have unintended consequences. Regulations shift, priorities change, and long-term planning sometimes gives way to short-term political survival. We're already seeing signs of this. Many countries are debating debt-funded stimuli, industrial subsidies, and new forms of taxation. Others are looking at ways to manage energy transitions, support strategic industries, or navigate geopolitical alliances that are increasingly fluid. These decisions do not happen in isolation. When governments intervene more heavily in economic life, the reaction of markets often become less predictable. And that unpredictability tends to strengthen the case for assets that sit outside the political cycle, such as gold and to a degree silver. Another point is the changing behavior of investors. Over the past decade, much of the investment world became accustomed to low rates, stable inflation, and abundant liquidity. That environment is gone, and many investors are still adjusting. We may see a shift towards more traditional hedges, more defensive positioning, and a renewed focus on real assets. Precious metals naturally fall into that conversation, especially if market volatility increases in 2025 or if growth slows more sharply than expected. And finally, confidence plays a large role. Markets do not move only on numbers, they move on sentiment, trust, and expectations. If confidence in currencies or policy direction weakens, even temporarily, gold and silver often act as a barometer of that uncertainty. So rather than focus on quick predictions, I think it's more useful to look at the larger currents shaping the world economy. And on that basis, 2025 and 2026 look like years where gold and silver will continue to benefit from the pressures building across the financial and geopolitical landscape. As always, thank you for watching, and feel free to share your thoughts below. We would also appreciate it if you would give this video a thumbs up, subscribe, and press the bell sign so that we may reach more people with this channel, and you will be notified as and when our videos are published. Thank you for listening.